enabled. ICICI Lombard and CNBC TV18 present the India Risk Management Awards.
Now, as someone once said, life is inherently risky, and the only one big risk you should avoid at all costs is the risk of doing nothing. And I'm sure none of you in the audience have taken upon you that risk. So ladies and gentlemen, without much ado, let me give you a very warm welcome to the India Risk Management Awards 2018 presented by ICICI Lombard and CNBC TV18. Now, risk could be a major cause of uncertainty in any organization. Companies today are increasingly focusing more on identifying risks and managing them before they turn into crises. The India Risk Management Award 2018 is one such unique platform that honors organizations that have constantly evolved and created the best risk management practices and capabilities across business categories. Now, without further ado, I would like to invite on stage the Executive Editor of CNBC TV18, Ms. Lata Venkatesh, to come and address the gathering. Lata.
Thank you, Ritu. Well, on behalf of CNBC TV18, it is my pleasure to welcome all of you to this year's India Risk Management Awards ceremony. Well, risk has always been inherent in business. What has changed really is the speed and the intensity with which risks hit us. So many of the risks were actually part of sci-fi until recently, but suddenly they've all become realities. For instance, driverless cars, drones delivering pizzas, 3D printing, or artificial intelligence, chatbots, or for that matter, even blockchain. All these are rendering large parts of our economies, our businesses, and our employees either unemployed, unemployable, or at least catching for breath to manage this change. When ICICI Lombard and CNBC TV18 came together and conceptualized the India Risk Management Awards, the intention was actually to spread awareness about risk. With each passing year, there are more companies who are offering themselves as nominees for the Risk Management Awards. There are more companies who are ticking more boxes. There are more companies that are able to pass the grueling test, which our knowledge partners, PwC, have designed preparatory to selecting the shortlist for the risk management candidates. We are also hoping that we will give wide publicity to this event, to the award winners and what messages they have to give us, and thereby perhaps improve the ability of companies to think about risk systematically and to manage it systemically. That at least is our goal. Thank you very much, and once again I wish all of you an enlightening and hopefully an entertaining evening as well. Thank you.
Thank you very much, Ms. Venkatesh, and you've already given them a teaser of what's to come. I would now like to invite on stage the man responsible for bringing all of us here tonight, and that is the Managing Director and CEO of ICICI Lombard, Mr. Bhargav Dasgupta, to share his thoughts about these awards. Mr. Dasgupta, please.
Good evening, ladies and gentlemen. On behalf of ICICI Lombard, it's a great pleasure to welcome all of you to this evening where we recognize some of the risk leaders at India Inc. Going back to the history of insurance, when the first insurance policy was written in Edward Lloyd's coffee house, insurance industry has been at the forefront of identifying and then insuring some of those risks for their companies. Now, those days risks were different. We started with marine insurance. When London fire happened, we provided covers for property risk, fire risk. Over the years, as automobiles developed, we provided those covers, and as healthcare costs went up, we started covering some of those risks as well. But at ICICI Lombard, we believe that as risks morph, as risks change, you have to morph and change with times. Lata talked about some of the major changes in technology and the impact that they're going to have, or in fact having, on all of us. Some of these changes are extremely positive for society at large, but equally bring with it a bunch of risks that we as a society, as a human society, haven't anticipated, don't even know, what they will be and how to address them. Now, at ICICI Lombard, we've always strongly believed that risk management is one of the strategic pillars that differentiate great organizations and good organizations. And as the world becomes more complex and interconnected, this criticality of this aspect is increasing even more as we speak. Now, when it comes to Indian companies, we are seeing many take the lead to traverse the path to prudent risk management. Not only are some of these organizations equipping themselves with tools, solutions, strategies to address risk scenarios, we are also seeing risk leaders outperforming others in terms of delivering value and shareholder value when we speak of value. When we look at a study of the companies who have been nominating themselves for the India Risk Management Awards over the last 3 years, from 2014 onwards, when we've been working with CNBC on this award, clearly it reveals that those companies, the firms which are coming through as scoring high on risk management implementation curve, are actually outperforming the BSE index, BSE 500 index in terms of shareholder value creation. So clearly the point that I think Lata also made in terms of risk management being core to creating shareholder value and long-term sustainability is clearly visible to all of us. And we at ICICI Lombard believe that recognition platforms like India Risk Management Award can act as a catalyst to promote the cause of effective risk management. It is also a platform for thought leadership. And today we have Professor Roubini, someone that needs no introduction. Thank you, Professor, for coming over from US to be with us today. I would also like to take this opportunity to thank the jury for their contribution. I think we are a fantastic jury, and the deliberations were outstanding. So while some of them may be here, but in appreciation of the work that they've done, a big round of applause for all of them, please. I would also like to congratulate all the winners who will be taking the awards today. Each one of you are truly a leader in this aspect of risk management and have showcased excellence in the risk management practices, and we bow to all of you. Thank you all of you for joining us this evening, and look forward to a wonderful evening together.
ICICI Lombard and CNBC TV18 present the India Risk Management Awards.
At this point, I'd like to invite our guest of honor, and hardly needs an introduction, Professor Roubini. Please join us here.
Good evening, everyone, ladies and gentlemen. It's a great pleasure and honor being here and being a keynote speaker. I've been coming to India for the last 25 years, and I've been many times to this great city of Mumbai. And it's really a great pleasure and honor being here in this wonderful country and this great city. I guess that one of the reasons why I've been asked to present this keynote today at this risk management award is that I've been one of the few economists, as was pointed out, that predicted the US housing bubble and the subprime bubble and the credit bubble and eventually the bust that led then to not just the US and banking crisis, but also to the global financial crisis. And as I travel half of my time around the world, I often get asked, how did you predict the global financial crisis? Did you have a crystal ball? I say, no, I did not have a crystal ball. And then the second question is, of course, where is going to be the next crisis, in which country, in which sector, and when? And is there a risk of another global financial crisis, and over which horizon? And of course, the next question, of course, is one about the global economic outlook. What's the outlook for the US, the global economy, for China, India, and emerging markets? What's the outlook for economic growth, for inflation, for economic policies, monetary, fiscal, and otherwise? And of course, what are the implications of that for a variety of asset prices like US and global equity, bond yields, currencies, commodities, and emerging markets? But more recently, actually, as I go around the world, the very first question being asked is the one, should I buy Bitcoin? And is Bitcoin a bubble or not? So we live in a world of uncertainty. We live in a world of risk, whether you are a economist, an academic like me, whether you are a policymaker, whether you are a businessman like many of you, whether you are an investor, you are facing a number of risk and uncertainty, and you have to make economic, investment, business, financial decisions that imply saying something about factors that still about the future that are unpredictable. So the question is, in some sense, how you make sense of the future, how you predict the future, and how you manage a variety of risks that you have to face. So whether it's biotech, whether it's information technology, whether it's manufacturing, whether it's fintech, is this combination and symbiosis between AI, machine learning, Internet of Things, and big data. There's going to be a massive revolution. And therefore, this technical disruption is going to completely change pretty much every industry. We're going to go from an old economy to a new economy. We're going to go from an analog economy to a digital economy. We're going to have new industries, new firms, and we'll have a massive amount of Schumpeterian creative distraction. I'll make the final observation that is an important one. Technology can change the world for the better, but we know that also these technological innovations are going to disrupt jobs, are going to disrupt income, and are going to disrupt entire industries. Some people are optimistic and more utopian, and they say, yeah, jobs are going to be disappearing, disrupted, but there are lots of industry of the future and lots of new goods and services we're going to create, and like the first and second industrial revolution, eventually there'll be job creation, so let's not worry about it. While there is another view that is more dystopian that says when we lost jobs in primary and agriculture, people went into secondary and industry. When jobs in industry were lost, we went in services and tertiary. And once AI is going to now replace jobs not only in manufacturing but also in services, which are going to be the jobs of the future, and therefore a future of technological permanent unemployment for those people who don't have the skills to survive and thrive in this globalized digital economy. It's a risk that we're facing, both in advanced economies and emerging markets. The reality is that we don't know whether the future is going to be more utopian or more dystopian, and in part that's going to be also a function of the right economic policy. If we provide with people in advanced economies and emerging markets with educations, with skills, with a human capital that allows them to survive and thrive in this digital global economy, the future is going to be bright. If instead we don't do the right types of economic policies that provide people with the ability to survive and thrive in this global economy, the current populist backlash against trade, against globalization, against migration, against supranational authority and global governance, but even against technology, because technology is going to disrupt jobs, is going to become much more radical, and the political consequence is going to be a rise of populism that eventually could be destructive of economic growth, welfare, and opportunity for many people. So leadership is necessary in the private sector, leadership is necessary in the public sector, assessing the risk, the upside and downside is key, and therefore having the appropriate risk management tools, both in the private and public sector, is essential for making sure that the future is a bright future for the world economy, emerging market, advanced economy as well. I'll stop here, and thanks very much for your attention.
ICICI Lombard and CNBC TV18 present the India Risk Management Awards.
A renowned statesman once said, "Whatever you can do or dream that you can do, begin it. Boldness has genius, power, and magic in it." So it's time to find out whether boldness was what it took to win the awards this year. This year, the India Risk Management Awards evoked a tremendous response from large-scale, medium, SME, and public sector enterprises across the country. The winners were handpicked by an illustrious jury panel with a diverse industry experience. These set of awards this year are for Best Risk Management Framework and Systems. They recognize the initiatives that have been taken by companies to build a comprehensive risk management framework. And to felicitate the winners, I'd like to invite on stage Professor Roubini, Mr. Ramesh Swaminathan, CFO and whole-time director, Lupin, Mr. Sanjeev Mantri, Executive Director at ICICI Lombard, Mr. Bhargav Dasgupta, and Ms. Lata Venkatesh. Please do join us on the stage. So let's take a look at the first award category for this evening.
Best Risk Management Framework and Systems, ITES. The winner is Tata Consultancy Services.
Our first award winner this evening. Our next award category for the evening, ladies and gentlemen.
Best Risk Management Framework and Systems, Sustainability. The winner is Hindustan Zinc Limited, Vedanta.
Receiving the award is Mr. Amitabh Gupta, CFO, and Mr. Lakshman Shekhawat, COO at Hindustan Zinc. Our third award category for the evening.
Best Risk Management Framework and Systems, Capital Projects and Infra. The winner is Larsen & Toubro.
I'd like to invite on stage Mr. R. Govindan, Vice President Finance and Risk Management L&T, to come and please accept the award. Please give our winners a big round of applause. Moving on, here's our next category of awards this evening.
Best Risk Management Framework and Systems, FMCG. The winner is PepsiCo India Holdings Private Limited.
I'd like to invite on stage Mr. Vineet Jain, Senior Director Finance at PepsiCo India, to receive the award. In this category, we also have a special jury citation.
In the category Special Jury Citation for Risk Management, FMCG. The winner is Gujarat Cooperative Milk Marketing Federation Limited.
I'd like to invite on stage Mr. Prakash Aute, Western Region Head, GCMMF, to receive the award. We move on with our next set of awards, and I'd now like to invite Mr. V. Ramakrishnan to join Professor Roubini and everybody else on the stage to give away the awards. Well, here's a look at our fifth award category this evening.
Best Risk Management Framework and Systems, Logistics Risk Management. The winner is All Cargo Logistics Limited.
And receiving the award for All Cargo Logistics is Mr. K.V. Mukundan, Chief Assurance and Risk Executive. Joining him is Mr. Sandeep Anand, CEO, Projects and Engineering Division.
Best Risk Management Framework and Systems, Metals and Mining. The winner is Tata Steel Limited, India.
I'd like to invite on stage Mr. Kaushik Chatterjee, CFO and Executive Director at Tata Steel.
ICICI Lombard and CNBC TV18 present the India Risk Management Awards.
In an exclusive interview with the guest of honor, Professor Nouriel Roubini, CNBC TV18's Lata Venkatesh touched upon many aspects like the US market, dollar pricing and a lot more. Here's a quick look.
Well, for starters, I wanted to ask you if there is any risk in the way financial markets are pricing in growth. The US markets had 62 all-time highs in 2017. Is there a risk that the markets are already frothy?
Well, certainly if you're looking at price-to-earning ratio, PE ratios in the United States, they seem to be high. There's one measure, there's the cyclical adjusted PE ratio that my former colleague at Yale, Robert Shiller, has derived and is already 2 standard deviation above the historical mean. There is a sign that either a significant correction can occur over time, or if a correction were not to occur, that over the next 10 years, equity returns are going to be relatively low, since some of the increase in valuation have been stealing some of the gains from the future. But it's also true that while these valuations are high, a couple of caveats. A correction might occur only somewhere down the line. It might take a year or 2 or 3. The fact that these measures are above historical average doesn't mean the correction occurs. Secondly, usually corrections occur only if there is a macro shock that leads to then a risk-off episode. In the last 2 years, as I pointed out, was China worries, US growth stalling worries, Fed worries, oil falling and collapsing worries. None of these risks so far seems to be high, but you need a major macro risk to have a correction. Secondly, to have not just a correction is 10%, but a bear market, you need something like a stall of economic growth. And currently, the risk of a US recession is low, so 10% is unlikely, 20% is even less likely. But it's also true that increasingly there's been a gap between Wall Street and Main Street. Wall Street prices have gone higher and higher, while US economic growth has been stalling around 2%. Real wages has been growing in a mediocre way. Many people and households have still a lot of debt, and their income growth is mediocre. So Wall Street has gone this way, Main Street has been going this way. So either eventually there is a pickup of growth that justifies these high valuations, or eventually this gap between Wall Street and Main Street is going to lead at some point down the line to something of a market correction. When that correction is going to occur is not clear, but something has to give in over time.
Would it be the tax cuts? You've tweeted and written about the tax cuts, that they are fundamentally inequality exacerbating, that they are a favor for the rich. Would you say that that could risk a year down the line some kind of popular resentment and therefore a political economy risk?
Well, you know, in the short run, these tax cuts that go mostly to the corporate sector, the corporate tax rate cut from 35 to 20%, and mostly to high net worth individual, have been boosting actually the stock market further higher, and has gone to even higher levels. You're asking me the question of whether eventually this rise in income and wealth inequality may lead to a political backlash and resentment that is going to lead then to more populist policies like restriction to protectionism, migration, and other ways of micromanaging the political system, that the private sector, that will be negative for economic growth and for the stock market. That's a risk over the medium term. In the short run, of course, these tax cuts have boosted further the business and the investors' confidence. But I think that one lesson we've learned is that this populist backlash against globalization, trade, migration, is in part driven by this rise in inequality, and this rise in inequality is driven by globalization, trade, migration, and technological innovations that tend to be skill bias, labor savings, and so on, and therefore that's a risk that we have to address.
Do you think that sometime in the first half of 2018 itself, we could see some smart rise in the dollar? Is that a possibility?
It is certainly a possibility. The question is how much US growth is going to pick up relative to other advanced economies, how much the Fed might surprise on the upside, inflation surprise on the upside by hiking not only 2 times, not only 3, but even more. As I said, the value of the dollar depends on not just what monetary policy growth and inflation are in the United States, but also what monetary policy growth and inflation are in Europe, in Japan, and other major emerging markets. You know, in the case of many emerging markets, actually, their currency appreciation may be affected also by the foreign exchange intervention policy of the central bank. The RBI actually reacted this past year to the strengthening of the Indian rupee by intervening quite aggressively. The amount of reserves has been significantly increased. There has been even forward intervention, and the appreciation of the rupee, given the capital inflows, would have been even stronger if that intervention had not occurred. So another variable to keep in mind is how much central bank going to do verbal intervention initially and actual forex intervention as a way of limiting or reversing some of those appreciation pressures.
Well, a final question. One advice to Prime Minister Modi?
The advice will be that he has started the process of a variety of economic reforms. More need to be done, and the more those reforms occur, the more chances are that potential growth of India goes from 7% to 7.5%, from 7.5% towards 8%. But to get to 7.5%, 8%, current policies probably are not sufficient, but more needs to be done. And if he wants to pass to history with the legacy of having changed for the better India, definitely he should be continuing with the same policies in the near future, and so on.
Thank you very much, Dr. Roubini, for speaking to us.
ICICI Lombard and CNBC TV18 present the India Risk Management Awards.
Let's move on to the third round of awards tonight at the India Risk Management Awards 2018. And to felicitate those winners, I'd like to now invite on stage Mr. Bhargav Dasgupta, Mr. Alok Agarwal of ICICI Lombard, and Mr. A.B. Ravi, Editor Special Projects at CNBC TV18. Right, our next category this evening.
Best Risk Management Framework and Systems, Power. The winner is the Tata Power Company Limited.
Well, first up from Tata Power Company, we have the COO and ED, Mr. Ashok Sethi, with Mr. Ramesh N. Subramanian, CFO, to take the award. All right, our second winner in this category, ladies and gentlemen.
The winner is Power Grid Corporation of India Limited.
And from Power Grid Corporation, may I now invite Director of Finance, Mr. Keshri Khan, to come and please collect the award with his team. Next category of awards is
Best Risk Management Framework and Systems, Travel. The winner is Thomas Cook India Limited.
May I invite on stage Mr. Mahesh Iyer, CEO, and Mr. Brijesh Modi, CFO of Thomas Cook India, to please come and collect their awards. A quick look at our next category of awards this evening.
Best Risk Management Framework and Systems, Hospitality. The winner is Interglobe Hotels Private Limited.
From Interglobe Hotels, may I invite Mr. Ashish Kumar, CFO, to please come and receive the award. For our next set of awards, I'd like to invite on stage Mr. Shiv Kumar Sriraman. Our next award category for the evening.
Best Risk Management, Framework and Systems, Business Continuity and Cyber Security. The winner is Tech Mahindra.
I'd like to invite on stage President Tech Mahindra, Mr. Manoj Chugh, and Mr. Lucius Lobo, Chief Information Security Officer at Tech Mahindra. Our 12th award category for this evening.
Best Risk Management, Framework and Systems, Risk Governance. The winner is Tata Steel Limited, India.
Once again, for your second time, I'd like to invite Mr. Kaushik Chatterjee, CFO and Executive Director, Tata Steel, to come and take the award. Number 13, our next category for this evening.
Best Risk Management, Framework and Systems, Risk Technology. The winner is ONGC Videsh Limited.
I'd like to invite on stage Mr. P.K. Rao, Director Operations, along with Mr. Arun Mittal, CRO, ONGC Videsh, to come and please take their award. Mr. V. Ramakrishnan and Mr. Ramesh Swaminathan, can I invite you back on stage to join the rest of the presenters? Our next award for the evening, ladies and gentlemen.
Best Risk Management, Framework and Systems, Automotive. The winner is Ashok Leyland Limited.
Receiving the awards for Ashok Leyland is Mr. T.V. Venkatraman, Vice President, Head, Internal Audit and Risk Management, and also joining him on the stage is Mr. Amar Shah, Deputy General Manager. Ladies and gentlemen, we're on to our last 3 awards for the evening, and the next category is
Best Risk Management, Framework and Systems, PSU. The winner is Power Grid Corporation of India Limited.
our next category for this evening.
Best Risk Management, Framework and Systems, Private Company. The winner is Tata Consultancy Services.
All right, for the second time tonight, I'd like to invite on stage Mr. F. Balasubramania, CRO, and Mr. Ramki, CFO, Tata Consultancy Services, who is already on stage, to please come and receive the award. Ladies and gentlemen, it is now time to announce the winner of the last category of awards this evening.
Best Risk Management, Framework and Systems, Conglomerate. The winner is Reliance Industries Limited.
Our final winner for the evening, may I now invite Mr. Alok Agarwal, CFO of Reliance Industries. Mr. Doi Vastos, great you're here to please do join us on stage.
let Mr. Agarwal go that way. We rarely ever get him on stage. So, Mr. Bestall, if you can stay for a minute.
Take all the questions.
Okay. It doesn't matter. But what is the risk of getting an IPO of Rel Jio this year?
When we look at risk management, and Rui is the boss, IPOs don't figure into it.
Okay. No IPO this year. That's an opportunity. Exactly. I posed it as a risk, but I thought it was an opportunity. Well, when do we get that opportunity?
As they say, watch this space.
All right. Thank you very much.
Well, I'd like to congratulate all of the well-deserved winners for constantly setting benchmarks and promoting a strong risk management culture throughout their industries. Now, before we bring the curtains down, can I invite all of the winners and presenters back on stage for a group photograph, please? Do join us. All right, everyone, a big round of applause for all of our winners this evening. Congratulations once again to all of the winners this evening.
ICICI Lombard and CNBC TV18 present the India Risk Management Awards.